Welcome to TradeTheNBI.com. This is John. This report is for the 13th, but it's not a Friday. So that means it's all good. But on Friday, well, we continue doing exactly the same with the magenta at this level on the NBI readings above well, in this case, above 40 level. It's all good. So, and that's why we got a continuation. So this is all on bulls to keep things moving. From these readings, you're really not looking at any major threats. It's just a question of do they have enough sustained buying power to keep things going. So shakeout just about to move to a positive. Actually, it's just slightly on the positive reading side now to begin the day. So we'll see if it's able to maintain that and move forward. But all in all, the headwinds that exist haven't changed. Nothing new. Everyone's going to be looking for the inflation print. Comes out on Wednesday, so it built up prior to that from an NQ standpoint. Same strength. What you do know, and I was talking about this on the Skype chat. This gray line right here, which we call the blue X line. And literally what it's looking for is when you get above the 25 level with that and it pivots, like here, once that red crosses above, that's usually a turnaround from a declining standpoint. So in this particular case, you're already continuing its rise. So that's not going to be stopped at any stage this particular point. So just go with what is. And that's the market still maintaining a positive stride. From a treasury standpoint, yields way below where, particularly if the CPI comes in hot, which is expected. Why would you be buying treasuries? It's a lose, 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 lose. So the only place to be is in equities and or commodities. But oil has been sliding off quite a bit. Of course, you have situations like Sunday where there was an attack on Ukrainians, attacked one of the Russian refineries again. And, if Russian output is diminished, tight global supplies, that could have a significant impact on oil, which would be a major negative for the market broadly. As long as it remains soft, that's a support of the euro, so that's something that they're very excited about. Biden's even still threatening to additionally deplete the Strategic Petroleum Reserve to help keep oil prices at a minimum because he's sort of running out of time. You got to get that much lower in order to uh, help soften the perception of how bad inflation really is. From a gold standpoint, it's not going to stop. It's in a soft mode at this particular stage, but that could trigger as soon as if you get a large CPI print and the Fed keeps talking, softness. Gold has nowhere to go but up. From your crypto standpoint, likewise is going to be the situation. They're just working through some of the excess supply and obviously the decrease in miners getting their cut. That has an impact on an ETH, of course. Very concerned about that from a monetary standpoint. So there's going to be regulatory hurdles, and that's what it's facing. But all that's really happened is we filled the positive extreme. So nothing new under that sun, so to speak. From a 50K standpoint, and the long trade closed out a little bit early. We were talking about this situation and what you look for when we were talking about continuations from shorts. When you get that pivot of that gray line, corresponds to what you're seeing from a magenta. But as I was pointing out, the turnaround point would be when you see the red crossing back above the gray line right there, and that pretty much signaled the turnaround for the market at that particular stage. And sure enough, that was all it took. And so, pretty clean from that standpoint. Um, all in all, not bad action in general. From an intraday standpoint, it was all sell early on, and then of course by midday they reversed the gamma on all that and shot it back up. And this is that I would expect that's the volatility that you're going to see. Most of it is from the option plays that exist here in the pre-market. Things are just above the finish line here. We're up slightly, just 3 points, but that's going to ebb back and forward. There's some positive extremes that got to get worked out a little bit. Potential down to the 44 range exists. May not see that at this particular stage, but you know, this is part of that ongoing back and forth, and as the Russians increase their offensive, and we see whether or not the West is going to scramble to start putting NATO troops into Ukraine, and that kind of situation could really escalate the situation globally very fast. So that's where the headwind risks exist because those are unknowns, and that could really cause a significant change in perception. So other than that, though, it's pretty straightforward following those readings. It's still bullish from a daily standpoint, so it's just a matter of following intraday signals that align with that. As always, though, anything relevant, I will put on the Skype chat. Have a good one.